Without going into too much technical jargon, this can get really confusing. I want to talk a little bit about interest rates. They're the hot topic right now, so let's address the elephant in the room. It's pretty much as simple as it comes down to supply and demand. Investors will buy mortgage-backed securities in order to, as an investment portfolio, as part of their investment portfolio, and so they'll do that. And as inflation rises, and there's more and more inflation, and inflation is 8% a year, well, those 3% mortgage rates aren't going to sustain over the next 30 years to keep up with inflation. So they're essentially losing money. As you know, investors aren't really in the game of losing money. So on top of that, you've got the Fed, who, although they don't directly change the mortgage rates, what they do is they affect monetary policy, and the monetary policy is a big part of that equation too. So we got two things that have been fighting against us. The monetary policy has gone to a lot more of a hawkish monetary policy. They're tightening up, so the demand has slowed down from that. And then also with inflation being where it is, demand has slowed down significantly because of inflation. So there's just not enough people out there willing to risk it for low interest rates. So that's why the rates have gone up. One thing to keep in mind is rate change every day. Just like the stock market, this market is running on a whole lot of different factors, but I feel personally like the primary driving factor is emotion at this point. A lot of the things that happen day to day in the market just don't really make any sense and don't correlate to anything. So I really hope that over the next couple months they start settling in a little bit and figuring out where this is going to lie, and in a year from now or however long we go into recession, there's a high likelihood that rates are going to go back down. I think that's going to happen for sure. It's just, when does it happen?